Hello and welcome to another update on render. Yeah, the render chart, I want to start here on the larger time frame because this is a chart that gets requested again and again. It's a cryptocurrencies chart, of course, and many of you know it. And the move to the upside is best considered as a so-called ABC structure. Yeah. So where we have an A wave rally, which is a 5-wave move into the 2021 high, a so-called B wave pullback, 3-wave move down, which set the stage for a C wave rally in this cycle. It's important to understand that normally when we're dealing with this, we want to see in a C wave 5-wave movements to the upside. Now, there are different ways how this can be understood. From a bullish point of view, we basically could say we still get one more high. Why? Because if this is a C wave, the move is best considered 3 waves up only at the moment. And we have a wave 1, we have a wave 2. This is a 3rd wave. This might have been the 4th in the April low, and we could get one more high in the 5th wave. There's an ideal target area between $17 and $28. This would be ideal. Within this scenario, we might even get one more low. This is a possibility. We might get one more low. As you can see here, this is highlighted here on the chart. The support area is basically relevant for this scenario. $1.54 would be the key support level here that helps us distinguish the bullish count from a bearish count. Now, what would be the bearish count? The bearish scenario, and I can highlight it on the chart in orange, would mean that, yep, this was an A wave, but the B wave is still unfolding, okay? And we have an overshooting B wave here. In that case, I can't really label that as 5 waves up, because technically speaking, from an Elliott wave point of view, you cannot really have an overshooting B wave. Hold on, I will put that onto the chart. You cannot really have an overshooting B wave if the A wave is a 5-wave move. So I would challenge that viewpoint a bit, but then again, markets aren't always moving in perfect textbook patterns, and it's not perfect science. But exactly because of that, the orange scenario is not clearly preferred at this point. But there is, and that's great with Elliott wave, there's always the level that tells me when the orange scenario will likely take the lead. And that would be a break below $1.53, our support level, yeah? So what I'm tracking basically is then a bullish count, A, B, wave C, ideally with one more high. And now we're going to zoom in a minute. Or, and that's the bearish alternative, you could say, we never completed the B wave. Yeah, the June 22 low was never the B wave. Rather, we have wave A, then the B wave unfolds as A overshooting B wave, C wave. So if we lose support, there needs to be a bearish alternative. Then most likely this could lead to a test maybe of the December 2022 lows around 40 cents. So that is what I am tracking at the moment here on the render chart. Bigger picture-wise, gives you also the larger degree targets and our key support level. Now, the question is, have we actually bottomed? Have we bottomed in April? Because I can consider the move to the downside an A, B, C structure. It looks technically complete. The problem is, from that April low, I don't really clearly have a 5-wave move up. Well, you could say it is, but it's not very clear. I'm going to zoom in a minute. I can make a case for maybe one more low. So, but we don't know, okay? We don't know. So I can say that maybe this is a 5-wave move up, which indicates, yep, the trend could have shifted to the upside and we get that one more high that we want to see. Absolutely, it's possible. Definitely possible, definitely plausible. But then there is a very, very clear, it's not so much about anyone's opinion here. There's a very clear invalidation point, and that's the red line, and that's located at $2.50. So it's a pretty good reward to risk ratio from here, I would say, but it's too early to say it's bottomed. The pullback is too deep. Let me go to the 4-hour chart. The pullback from that swing high on the 11th of May is too deep to be clearly part of a so-called 1-2 setup. So the problem here is that this is a double bottom structure between the April low and the March low. You could easily find a way to call that just an ABC structure to the upside, a 3-wave rally with one more low. So therefore, I'm not fully convinced we've bottomed. Also, the pullback here was extremely deep for an internal wave 2 pullback. So I have little hope. But I keep the door open for higher as long as we hold above the invalidation point. What I need to see now is a little bit more upside momentum. I want to see a break above that internal B wave high at $4.20, followed by a break above that other high, the X wave high at $5.34. And then we can start to look for higher prices, really. The reaction from the Sunday low is only in 3 waves up so far. So here I have absolutely no evidence that a low is in. It takes a little bit more evidence, really, right? We get one more high now, then we might call it 5 waves, but it's too small. Okay, it's just too small. So I think that should give you an overall good perspective of what's possible here and the risks on the render chart. Below the April low, I have nothing immediately bullish left. The market would need to form another 1-2 setup to the upside. The upside reversal attempt is this. Good reward to risk ratio now. But if we break below the April low, the price needs to build this again. And then, yeah, basically $1.53, $1.54 will become the key support level. So yeah, that's the render update. Hope it helps. Make sure you follow and subscribe. Thanks so much. Bye-bye.